February 4th, 2026, 7 pieces, 1 strategy. And it is now live. This is not news. It is a mathematical certainty because it follows a cycle that has already happened 3 times in history, and every time it happens the same way, it ends the same way. And it destroys the empire that refuses to see it coming. Same pattern, same sequence, same outcome. You can argue politics, you can argue ideology, you can argue personalities, but you cannot argue math. Not opinion, pattern recognition. And once you see the full structure of what China is doing with gold and silver, you can't unsee it. Here's the rule that governs every reserve currency empire in the modern world. It is not moral, it is not emotional, it is not even geopolitical. It is arithmetic. First, the empire discovers it can print claims faster than it can produce real value. Second, it uses those claims to finance war, welfare, and global control. Third, the claims multiply until the rest of the world realizes it is holding paper promises, backed by political will, not hard constraint. Then the world looks for an exit, not a revolution. An exit. Quiet, gradual, bureaucratic, legal, technical. And that exit always starts with hard money. Always. Verified. Rome did it first, and the receipts are stamped into metal. The Romans didn't collapse because barbarians were strong. Barbarians have always existed. Rome collapsed because its currency stopped being a measurement of value and became a tool of survival. Silver denarius after silver denarius got shaved, diluted, debased, until the coin still looked like money but behaved like fraud. Soldiers demanded more pay, prices rose, taxes rose, the state expanded coercion to force acceptance of weaker coin, and trust dissolved faster than legions could restabilize the frontiers. When money becomes a political instrument, the empire becomes a hostage of its own accounting. That is the first stage of the cycle of collapse. Verified. Then the Dutch. Not debasement first, but war and debt. The Dutch built a trade finance machine so effective it looked immortal. But the moment your empire is built on financing, you are tempted into financing conflict because you can. War with England, war with France, expensive naval commitments, and a debt burden that gradually converts your financial brilliance into a liability. The Dutch didn't lose because they forgot how to trade. They lost because their debt and military costs outgrew their ability to dominate the system they once designed. When debt becomes the engine, it eventually becomes the cage. Check. Then the British. The cleanest example. The pound didn't die in a single day. Britain fought world wars it could not truly afford, borrowed beyond its productive base, and watched the center of gravity shift to the creditor who could manufacture at scale. The pound lost reserve status not because Britain stopped being important, but because the world stopped trusting Britain's ability to backstop the entire system indefinitely. Reserve currency status is not a crown, it is a mortgage, and eventually the payments come due. Verified. Now pivot with me, because this is where the conversation becomes personal. The West thinks it is at the cliff, that the danger is ahead, that the crash is a future event you can prepare for later. No, we are not at the cliff. We have already walked off it. The only question is how long it takes to hit the ground, and what you do in the falling time. Look around and listen to the language of your own institutions. A world that is healthy does not talk about emergency lending facilities like it's normal. A healthy system does not require constant backstops, constant interventions, constant temporary measures that never end. A healthy system does not need laws that expand surveillance over money movements in the name of safety. A healthy system does not normalize bailouts as routine maintenance. The final stage of the cycle of collapse always feels like management, not panic, because the people inside it need you calm while they reposition. The smart money is leaving. And here's the thing that will make you uncomfortable. The smart money doesn't leave by tweeting. It leaves by plumbing. It leaves by settlement rails, custody chains, vault flows, reserve composition, collateral preference, and trade invoicing. It leaves by infrastructure. Which brings us to China's 7-piece gold and silver strategy, the thing you were not supposed to connect, because once you connect it, the future stops being a debate and becomes a timeline. This is not about China replacing the dollar tomorrow. Anyone selling that is selling fear, and fear sells because it feels like action. The truth is colder. China is not attacking the dollar. China is building an exit from the dollar. And the exit is built with metals first, payments second, trade third, and debt last. Same pattern, same sequence, same outcome. Not might happen, will happen. Piece 1 is obvious, but most people still refuse to interpret it correctly. Gold, not as an investment, not as a trade, not as a hedge. Gold as a sovereign balance sheet weapon. When a central bank buys gold, it is not speculating. It is changing the foundation of its national credibility. It is reducing reliance on another nation's liabilities and increasing reliance on an asset that has no counterparty risk. Gold does not default. Gold does not get sanctioned. Gold does not require permission. You can confiscate a bank account with a law and a keystroke. You cannot keystroke gold out of existence. That is why gold sits at the bottom of the pyramid in every crisis civilization. Not opinion, pattern recognition. Piece 2 is silver, and silver is where the trap is being built, because silver is not just money, it is industry. Silver is electrical conductivity, solar capacity, military electronics, precision solder, medical applications, and the nervous system of the modern machine world. Gold is a store of value, silver is a choke point. If gold is the vault door, silver is the wiring behind the wall. Most people misunderstand silver because they treat it like cheap gold. It isn't. Silver is leverage because when you restrict a commodity that is both monetary and industrial, you force a decision on everyone downstream. Pay more, delay production, redesign systems, or submit to the supplier's terms. And the supplier's terms are never just price. They are settlement and allegiance. Piece 3 is the draining of foreign paper. You've heard the phrase, but you didn't hear it correctly. China is selling treasuries. That sentence sounds like a headline. The real meaning is a structural rebalancing away from U.S. liabilities and toward sovereign autonomy. You don't do that if you believe the future is stable and friendly. You do that when you believe reserves can be frozen, payment channels can be severed, and legal jurisdiction can become a weapon overnight. The day a major power watched hundreds of billions in reserves get immobilized by political decision, the entire reserve architecture changed. Quietly, permanently, you can't unsee it. Piece 4 is the payment rails. This is where most people lose the plot because they think power is tanks and aircraft carriers. No. Modern power is settlement. Modern power is who gets to clear, who gets to insure, who gets to sanction, who gets to deny. The global dollar system is not money. It is an operating system. And if you control the operating system, you control updates, permissions, access, and shutdowns. So what does a rival do? It writes its own operating system. It builds alternate rails that can route around your control. And once those rails exist, usage grows for the same reason people buy insurance. Not because they want disaster, but because they refuse to be helpless if disaster arrives. Piece 5 is trade settlement, and this is where the world changes without a single dramatic speech. If trade can be settled in yuan, then demand for dollars is not reduced a little. It is structurally bypassed. Currency dominance is demand dominance. If you price energy, metals, food, and shipping in your currency, you force the world to hold your currency. If your currency is forced held, your debt is financed cheaply. If your debt is financed cheaply, you can outspend rivals. That is the loop. Break the loop and the empire still exists, but it is no longer exempt from gravity. Piece 6 is debt conversion. This is the cleverest piece because it changes the direction of a nation's future without invading it. A country that owes in dollars must earn dollars, must access dollar clearing, must obey dollar compliance. A country that owes in yuan must earn yuan, must trade with China, must use Chinese rails, must keep Chinese relations stable. Debt denomination is geopolitical alignment masquerading as finance. When you convert debt, you convert orbit. Piece 7 is the doctrine layer, the part that turns a series of actions into a state machine. When a leadership class frames currency strength as national power, when it writes internationalization goals into planning frameworks, when it coordinates banks, exporters, importers, miners, refiners, and settlement systems toward one aim, that is not a trend. That is a regime change. That is a country telling you, in plain language, that it is building a parallel financial reality. Not might happen, will happen. Now, let me connect the metals specifically, because this is the core of the title, and the title is not clickbait. Huge. China's 7-piece gold and silver strategy is now live. The reason it's huge is because it is not one lever. It is 7 levers, and levers multiply each other. Gold is the anchor. Silver is the choke. Treasuries are the unwind. Payments are the bypass. Trade settlement is the demand shift. Debt conversion is the orbit shift. Doctrine is the lock-in. And here is why gold and silver prices whip around violently in moments like this. The paper market is the illusion layer. It can be pushed, squeezed, margined, rehypothecated, and liquidated. The physical market is the reality layer. Physical moves slowly until it doesn't. Physical is boring until the day it isn't. The crash you see on a screen can be a liquidity event in paper, while physical quietly tightens underneath like a coiled spring. And the reason this matters is because empires don't collapse on TV first. They collapse in plumbing first. They collapse when the pipes no longer deliver what the contract promised. And when the pipes fail, it's not a philosophical discussion. It looks like normal life breaking in small humiliations that stack into panic. It looks like standing at an ATM with 3 people ahead of you, watching the first person try twice, then a third time, then stare at the screen as if the machine is personally insulting them. It looks like a bank branch that suddenly closes early for maintenance on the day payroll hits. It looks like payment terminals failing temporarily, So the cashier starts writing numbers on paper, and you realize nobody knows what the price is supposed to be anymore because the price changes between scanning items. It looks like rent being raised twice in a year, then twice again, while your wages stay frozen because your employer's credit line got repriced. It looks like grocery staples turning into luxury items, not because there is no food on Earth, but because the currency you earn is losing purchasing power faster than you can convert it into necessities. It looks like the quiet violence of unpredictability, because inflation is not just higher prices. Inflation is the destruction of planning. When you cannot plan, you cannot invest. When you cannot invest, productivity falls. When productivity falls, the state borrows more. When the state borrows more, the currency weakens. Same pattern, same sequence, same outcome. And the cruel part is that for a while it doesn't feel like collapse. It feels like inconvenience. It feels like glitches. It feels like a series of weird news stories that you scroll past because you have a job and kids and a life. That is why it works. Collapse in advanced economies is managerial. It is policy-shaped. It is disguised as stabilization. And while you are told to stay calm, the smart money is leaving. Now, do you understand why metals matter? Not because metals are magic, because metals are outside the permission system. Gold and silver are not someone else's liability. They are not a promise that can be revised by law. They are not a number in a database that can be suspended for your protection. They are the opposite of the modern financial stack. And when the modern stack begins to wobble, the thing outside the stack becomes priceless, not because it changes, but because everything else does. This is the part where people demand a guarantee, a date, a binary answer. Is the dollar collapsing next month? No, that's not how reserve transitions work. Reserve transitions are long, then sudden, then longer again. They're like a bridge that develops hairline fractures for years. Then one day a heavy truck hits the wrong spot, and the entire section gives way. The fractures are boring. The snap is history. You don't get warned at the snap. You get warned in the boring years. And the boring years are now. We are not at the cliff. We have already walked off it. So what do you do as a normal person, not as a central bank, not as a hedge fund, not as a state-owned enterprise with privileged access? You do the only rational thing you can do in a world where the monetary operating system is being duplicated in real time. You reduce your exposure to paper claims and increase your exposure to real assets. Gold, silver, land, productive tools, skills, community. Not because you want the world to burn, but because you refuse to be the last person holding promises when everyone else is grabbing collateral. And this is the psychological trick that ruins people. They think they have time because the shelves are still stocked today. They think they have time because the headlines are still fine. They think they have time because their phone app still shows a balance. But you cannot eat an app balance. You cannot heat your house with a number. You cannot defend your family with a spreadsheet. In a transition, the only thing that matters is what you can settle without permission. That is why China is doing what it's doing. That is why the strategy is 7 pieces, not 1. Because redundancy is power. Because resilience is dominance. Because the nation that can settle trade, store value, and finance itself outside enemy jurisdiction is the nation that survives the era of sanctions and fragmentation. And here is the line you need to tattoo into your brain, because it is the only sentence that matters in the next decade. Same pattern, same sequence, same outcome. Rome debased. Dutch overlevered on war debt. Britain lost reserve status after imperial overreach. Today, the West expands debt, expands promises, expands intervention, and assumes permanent privilege. That assumption is the only truly dangerous fantasy in macroeconomics. Privilege is always rented, never owned. So when you hear about gold and silver crashing, understand what you are watching. You are watching the paper layer convulse while the physical layer is being repositioned by states. You are watching volatility, not resolution. You are watching the screen, not the vault. The wealth transfer does not happen when you feel calm. It happens when you feel stupid for owning hard assets because the screen tells you they are down. That is when disciplined allocation is made, because the price is the bribe offered to shake you out before the next leg. You can call that cynical. History calls it normal. And I'm going to say something that will make some people angry, because they are emotionally attached to the idea that the system must remain stable because they are good citizens. Good citizenship does not protect you from math. Mathematical certainty does not care if you voted correctly, worked hard, or followed rules. If the denominator is debased, your savings are debased with it. If the reserve system fragments, your purchasing power fragments with it. If settlement rails diversify away from your currency loses forced demand. Not opinion, pattern recognition. You can't unsee it. So here is your choice, and it is brutally simple. You can hold more claims inside the system and hope the managers keep it stable forever, or you can hold some wealth outside the system, accept volatility, and buy yourself sovereignty. Most people choose hope because it feels comfortable. The people who understand cycles choose sovereignty because it is rational. If this sounds fatalistic, It's because the world is entering a phase where fatalism is just realism without denial. But that doesn't mean you are powerless. It means the rules are changing and power belongs to those who adapt first. This is a wealth transfer, not from rich to poor, not from poor to rich, from the unaware to the aware, from people who hold promises to people who hold assets, from people who think screens are reality to people who understand settlement is reality. Gold is not a get-rich-quick scheme. It is a get-out-of-jail card. Silver is not a cute, speculative trade. It is a potential choke point in an electrified world. Land is not just property. It is optionality in a world where supply chains fracture and policy becomes reactive. And none of this requires you to become a doomsday person. It requires you to become a structure person. It requires you to see the seven-piece machine and stop thinking in headlines. China is building an exit. The smart money is leaving. Same pattern, same sequence, same outcome. Mathematical certainty. You can't unsee it. Not might happen, will happen. If you want to understand the next moves before they hit mainstream media 3 months late, subscribe. I'm going to keep mapping the plumbing, the vault flows, the policy shifts, and the hidden incentives, because this is where history is being written, not in speeches, but in settlement. And if you are still watching right now, type your honest answer in the comments. Not what you hope is true, but what you know is true after hearing this. Do you want to be the person holding promises or the person holding assets when the operating system updates without your permission?